All right, we begin with the financial services industry in Nigeria with a new report from EnterpriseNGR, which looks at the state of Nigeria's enterprises 2025 report. There it is, State of Enterprise 2025 report in Nigeria. And we're going to be focusing, of course, on the banking sector, electronic payments, and insurance. We're happy to have Lami Adekola, Director of Policy and Public Affairs at EnterpriseNGR. Lami, you're very welcome to the show. Good to have you on here. To begin, they say that the financial services sector is the gateway to any economy. Can you talk about what you folks are doing over at EnterpriseNGR and why you put so much focus and advocacy on financial services and the professionals that work there?
Thank you very much, Rotus. And I'll start by saying it's not by happenstance that the biggest economies in the world have very, very strong financial and professional services sectors. And the reason is basically financial and professional services is the engine that makes all other sectors of the economy function. So be it capital formation, driving innovation, providing risk management frameworks, it's that sector that funnels the cash that runs any economy. And for us at EnterpriseNGR, we're a policy and advocacy group, member-led, established by operators within Nigeria's financial and professional services sector, coming from banking, insurance, capital markets, asset management, pensions, the full spectrum, fintech, professional services, and the rest.
It's all in your reports.
And we have members across that spectrum. Our belief is if we create an impeccable environment for financial and professional services operators to function effectively, we will, by so doing, engender economic transformation that will take us closer to that $1 trillion economy that we all keep talking about. So EnterpriseNGR's ambition is to be the voice of the sector, but more than just being the voice of the sector, be its hands sometimes where we need to do beyond recommending economic policy into actually being part of the execution and the change we want to see. So the State of Enterprise report is our annual marquee report that is a compendium of what has happened within one financial year. In this case, 2024, even though it's a 2025 economic report. And we've also taken a brief look at the Q1 2025 figures as well. And basically establishing where the sector is, things we're doing right, things that we could be doing better, regulatory recommendations, and it's that tool that we now use to engage with the public sector and regulators as a whole.
Fantastic. You've laid the groundwork perfectly. So, and it's very, very, thorough reports. And so, I mean, we could spend the whole hour talking about it, but I just picked out a few things. I want to start with, we're very biased towards technology, as your report is, and you guys talk about tech a lot with fintechs. Electronic banking, you have a chart where you looked at the EBanking income from select banks in Nigeria. It's growing, all right, generally, but do you think, talk about EBanking in Nigeria, you think it's going to grow to a point where physical branches, maybe in the urban centers, maybe I won't go to rural, where physical branches, they're not needed as much?
So EBanking is growing, and that's a brilliant thing. It's powered not just by our commercial banks alone, it's also powered by the fintechs. And we're beginning to see extensive growth in income generated from EBanking. But that said, the importance of physical branches cannot be underestimated. I'll give you a few data around that. So for Nigeria, what we call branch penetration, according to the World Bank, Nigeria's branch penetration is about 4.4%.
Okay.
Which is basically, we have 4.4 bank branches to 100,000 citizens, eligible adult citizens and stuff. In the UK, that number is 15%.
Wow.
In the US, that number is about 26%, despite the fact that they have very robust electronic banking frameworks and stuff. For retail banking element, yes, e-banking would go a long way to solving financial inclusion issues and all whatnot. And you might think, I might not need as much commercial banks, but when you think about more sophisticated transactions, more sophisticated commercial transactions as well, you would see that we need to have branches in the right places, encouraging things like credit to the real sector, encouraging things like credit to even big businesses as well.
Yeah.
And with the numbers I told you about more developed economies, you will see that the importance of having those branches, having banks near businesses,
Right.
Cannot be underestimated.
Okay. Now, I'm glad you mentioned businesses and being near them, because you also touch on electronic payments in your report as well. The latest figures from the Interbank Settlement System, NIBS, I think it was 285 or approximately 285 trillion, 22% year on year. What do you make of the big jump in electronic payments in the country?
It's phenomenal what is happening in the electronic payment space. And as I said earlier, powered by both banks and fintechs.
Yeah.
And in 2024, we hit the magic figure of about 1 quadrillion.
In terms of volumes, right?
Electronic payment transactions in Nigeria, 1 quadrillion naira.
That's huge.
Of electronic payments.
Yeah.
And you will begin to see that with the figures we have today of about 285 in just Q1, if you extrapolate that, we're going to get to around 1.4, 1.5 quadrillion this year.
Yeah.
And that's a good thing, because the cashless economy we're pushing for, financial inclusion elements that we're talking about, that how do we get more people into the financial system, is easily enabled by increased electronic transactions.
Yeah.
So digitalization and all whatnot. So what we begin to see and we encourage is, well, electronic transactions are increasing and it's enabling financial inclusion. We have to go just beyond the statistics alone.
Yeah.
So it shouldn't just be the number of people that have access to financial services and banks, but it should be around what kind of services do they have access to? How do we encourage more people to have access to insurance as well? How do we encourage, as I said earlier on, credit to the real sector through the banking and other subsectors of financial and professional services? So it's a positive that we're seeing those numbers rising, and the expectation is we will continue to see the numbers increase as we diversify into a more electronic system and moving away from a cash-based economy.
Well, I'm glad you mentioned financial inclusion, because again, like I said, incredibly thorough reports here. You touched on that. You've got a chart looking at financial inclusion and then the 94% targets, which we haven't quite reached. So we can't talk about electronic payments without talking about financial inclusion. Are e-payments the gateway to getting there? Or rather, not e-payments, excuse me, electronic banking tech, basically, to improving financial inclusion?
Most definitely so.
Yeah.
As in tech gets you into the door, gets more people into the financial net. But we must also ensure financial literacy as well.
Right.
Because when you're pushing tech, you need to make sure that that market woman in Zamfara is able to easily leverage the tech that we provide to gain access into the financial space and be able to do our trade, make our payments, receive those payments as well, and stuff like that. So while we believe very strongly that financial inclusion is the electronic means are the key to unlocking financial inclusion, we also need to very quickly enable that process of enlightening people on how to use it and educating them. Literacy is key.
All right. Literacy is key. All right, I want to talk about diaspora remittances. You've got a couple great charts showing that Nigeria is well in the lead in sub-Saharan Africa and the importance of it. And I want to marry that. So that's the chart there. I think, Nigeria well ahead of Kenya, 19 billion, Kenya 4.2, Zimbabwe 3.3. I mean, well ahead of the rest of them, as far as recipients in sub-Saharan Africa. I want to marry this with the Genius Act that passed in the United States and this regulation of stable coins. I know you delved into fintech in the report. Do you think that what the United States has done to regulate stable coins and legalize them will disrupt cross-border payments, and I guess cross-border payments and the financial institution in Nigeria with respect to if my aunt in New Jersey can just send me some stable coins and I just convert the crypto in 2 minutes and get the dollar equivalent as opposed to her sending it through other channels. What do you make of the Genius Act and what that could do to remittances and so on?
I think what the Genius Act does to stable coins and cryptocurrency generally is it brings a layer of regulatory structure that improves credibility. So when we have increased credibility of these instruments, it means adoption becomes better. And you're very correct. Remittances is extremely critical to Nigeria. $19.1 billion of remittances in 1 year. Put that into perspective. Right. That's almost half of our foreign reserves right. as a country, right? Yeah. So it's critical. And for us, the importance is how do we enable increased remittance flows, easy remittance flows, and encourage more Nigerians in the diaspora to bring money home, right? Yeah. My view of the Genius Act is it would increase the number of Nigerians that are adopting stable coins and cryptocurrency to get money.
And we lead in Africa, right?
We do. Yeah,
in crypto use.
And it reduces the cost to them.
Right.
It's basically almost 60% less than traditional transfer structures and all whatnot.
Yeah.
So it would boost the numbers of remittances we're seeing. Yeah. But that said, we also need to be mindful of increased need for cybersecurity.
Right.
To ensure these instruments are actually safe enough to make sure Nigerians are able to get their monies home and on time.
All right, I want to round off with the big news, of course, President Tinubu signing the Insurance Industry Reform Act into law. It's been languishing for a while. Again, I can't stress this enough how thorough your report is because you also delved into insurance. So there's a lot for us to talk about here. And, brilliantly, you've got a chart. So maybe we'll take this chart piece by piece. So my first question to you on the insurance sector in your assessment of it, and we can have the chart up at any moment now, but is that it's low contribution, the top left of the screen, right? I think we'll start there. Penetration. Let me start with insurance penetration, where we have the chart up. Very low penetration, under 1%, and also the contribution is also under 1%. Why is that? What is the challenge we're facing with insurance here?
So it's a combination of factors. Yeah. Insurance penetration in Nigeria, as you rightly said, is 0.44%, which is extremely low. Yeah. And these factors that are contributing to the sector not being as strong as it should be include enforcement of laws that we already have, like compulsory insurance laws and things like that. Includes orientation of the general public. So in Nigeria, most people believe, insurance is not really necessary, and God is my insurance, as it were. However, that sector builds resilience in any economy. Your ability to bounce back in the event of unexpected situations is tied to your insurance sector. And in other countries, the insurance sector is significantly massive and contributes not just to creating resilience, but the pockets and pools of funds it amasses through gross premiums. The impact it has on investment flows into the direct economy is critical. So for us in Nigeria, it's how do we begin to work together to ensure we go beyond just legislation into enforcement of some of these policies, into building a large enough balance sheet for the insurers. Because the thing about insurers is you can't write risks if your balance sheet isn't strong enough. So how do we funnel enough capital requirements, which this new law has increased the capital requirements for insurance. But more importantly, how do we also funnel businesses? So how do we make sure that Nigerian insurers are involved in the big ticket risk transactions in Nigeria. So you're not just insuring oil and gas cars, for example. You're actually insuring the FPSOs, the vessels, the very big ticket transactions, and making sure they're within the play. And I must mention that EnterpriseNGR is working with the Nigeria Insurance Association, as well as the Association for the Insurance Brokers, Lagos Chamber of Commerce and all whatnot, to take an in-depth look into the insurance sector. We'll be coming up with a report, but most of our reports are not just for the sake of documenting information.
You want action.
It's action. How do we take this from our policy recommendation and getting involved with the regulators, with the key stakeholders, to actually start solving the problem? If we move from 0.44% to closer to 1%, the impact it will have on the economy is significant. And it's that bird's eye view into the sector that we have that creates some of these things. I'll give you an example, a very quick example.
Please.
So we talked about credit to the real sector. If you buy a car today with your money, right, you might not feel the need to do a third-party insurance because it's your money. But if you got credit to buy that car, the provider of that credit will ensure
that you get it.
That you get full insurance, comprehensive, not third-party. So that tells you that if we create a credit system in the banking sector where there's more credit to the real sector, it will have a spillover effect. Very positive spillover effect into insurance. And for us as EnterpriseNGR, we stand at that place where we're saying, what's holding credit to the real sector down? How can we loosen that? And if we do, this is the impact.
And we need more, because I know the government has Credit Corp, they've got NEL Fund, education, and so on and so forth, but we need more private sector players to amass, to get more. Not, I mean, it's good that the public sector is doing it, but we need more, in terms of sources of credit and so on, right? And
and that's where we stand, because incredible things happen when the private sector and public sector are working hand in hand.
Exactly.
And for us at EnterpriseNGR, we're all about that collaboration. So while we're a private sector-led entity, we're working very closely with the public sector on a number of initiatives. I'll mention one that you might know of, the Lagos International Financial Center. Where we're creating a safe environment to encourage solid flow of investment business trade into Nigeria, by in Lagos having special incentives, having special rules and regulations similar to what we have in developed economies and stuff. With that collaboration, and this collaboration is in partnership with Lagos State and endorsed by the federal government and all whatnot, we would have a case where we have almost impeccable system running in LIFC, and that would more than trickle in to the main economy, and we'll start seeing these positive situations where credit to the real sector is getting better, credit to the economy is getting better, but local and international investment flows is also beginning to make sense. So that's a conversation for another day, delving into LIFC, but that's one of the things we are doing.
I believe that was mentioned at the Lagos recent investment forum, that the financial sector. So that's really fantastic work there. All right, look, Lami, what's your outlook for the financial sector? I mean, we've touched on insurance already, but do you think this act that has been signed by the president, I know a lot more has to happen beyond just signing a bill into an act. You think it's going to get us there in terms of even the assets? Your chart has the assets. I mean, one tier one bank has more assets than the entire insurance industry. So do you think that this act can get the industry, or what else needs to happen?
There are a lot of positive elements in the act, and kudos to the presidency for signing it into law, the bill into law. But as I mentioned earlier, it goes beyond the law being right alone. It comes to how do we ensure enforcement and a collective approach to enforcement. So operators, regulators, the entire society, ensuring that we try and push enforcement of the compulsory ones.
Right.
But going beyond compulsory, there needs to be a massive reorientation of both the retail customers, but and also commercial customers as well. And we believe that step-by-step approach will take us closer to the North Star. But kudos to presidency for signing that.
Finally, what's your outlook for the financial sector, I guess, for financial sector? I mean, I'm encompassing insurance and everybody else for Nigeria. Just summarizing the report that you guys have put out.
I think the outlook remains positive. Over the last 10 years, the financial and professional services sector, the growth in that sector has outpaced the growth in the Nigerian economy and has been contributing its more than fair share, I must say. So about 6% of GDP, where if we look at company income tax, we're doing around 25% of the total company income tax generated and stuff. And with some of these new policies that we're seeing, so like the banking sector recapitalization, what's happening in insurance and all whatnot, we expect going into the end of this year, you will continue to see a robust FPS sector that would contribute to economic transformation. It is important to state that for us to get to that 1 trillion economy, we need to have an FPS sector firing on all cylinders. And it's the responsibility not just of government, but it's also the responsibility of the private sector as well, working. So very positive outlook for the sector. And we think going into the end of the year, we will begin to see increased contributions. I won't talk too much about the capital markets, but I know you had a show, I think a fortnight ago, where you delved into it. 35% growth in one half of a year. Phenomenal. Phenomenal. And that bull run we expect would continue. But we now need to start looking at things like how do we deepen the market? People are not just making money on the upside. When there's a downside market, a bear market, you're also making money as in more developed markets. So positive outlook.
Fantastic conversation. And again, a great report. Lami Adekola, Director of Policy and Public Affairs at EnterpriseNGR. Thank you so much for your time. Really appreciate it.